There are a few sayings in the market, and this one's quite popular. Whether or not it has panned out is another question. But sell in May and go away is an adage that is quite familiar to a lot of people that have been in the markets for long enough. And this is something that I would like the two individuals that are joining me today to debate, because I've seen a very interesting set of arguments on both sides. And I would, am I right in saying that, Niraj, you're saying this may not come to pass? And no, it's the other way around. It's the other way around. Samina is saying that this may not come to pass. It may be positive.
We're just discussing it.
No.
We're not taking sides.
It has to be a pro and against. So one of you have to take a pro and one of you have to take an against.
You're going pro?
No, you're going pro.
No. So actually, the way we are trying to do this is I'm talking a lot more about what global factors might be doing.
So fair enough.
Samina is pointing
what it's going to be is
well.
Sell in May and go away does not happen this time, is what Samina is saying. And what you're saying is that
my argument is just that it may not work this time around as well on the global side. Even if Samina is saying that it will work, it will not work on the local. I'll put the reasons why.
You know, we'll let you decide. How about that? You decide the conclusion of this conversation.
Okay, fine.
Let's make it quick.
But just a couple of things, and of course we'll talk about all the good things which Niraj will bring in. But if I was looking at F&O data as we go into a brand new series this May, a couple of factors that did stand out. Now, remember, these are just data points which may or may not stand as we go into the month, but definitely worth a mention. One of them is April rollovers, which have been fairly healthy, actually didn't see, were lower than what we saw in the previous month and versus what we've seen in the last 3 months. So, for example, your April rollover number was 65.12 versus nearly 70% in March versus 72% in the month of Jan. So what I'm trying to say is that bulls were not feeling as aggressive at the start of the May series. Along with that, markets are bracing for some volatility. Remember, you've got these big events that are lined up, of course, local elections being the biggest one for us. Rollover cost also were much lower. So rollover, not much lower, but they were definitely more than half the rollover cost that we've historically seen at 0.3% versus a 3-month average of 0.72. Apart from that, the long-short ratio of FIs, which with a disclaimer looked very different yesterday, but at the start of the month the bias was on the short side. So traders, FIs were a little more cautious.
At the start of April, you mean?
At the start of May. We're at the start of May, right?
Yeah, but you're saying, you're saying
so
now.
as we go into May, at the end of the April series, rather, we were seeing the long-short ratio biased towards the short side. So all that made it seem like May could be a difficult month. You've also got a whole bunch of events. So you've got your elections, you've got the US Federal Reserve FOMC meet, you've got some of those quarter earnings. Geopolitical, while on the back burner yet, is tough to call, right? I mean, it's almost impossible to decide who decides to go after whom, what comes out of this. And of course, it's the China factor, which the sleeping dragon has woken up. But whether or not that's going to cause problems for us is anybody's guess. But historically, and this is what Niraj is going to also agree with me on, every election May has actually been phenomenal for the markets.
I mean, you don't need me to agree.
Data
needs to agree with you.
And actually, to add to that, which we'll substantiate, we saw this yesterday where Bank Nifty took the lead. And again, historically, in an election year, Bank Nifty does better than the index.
Okay, so those are prime. And
so I am on the fence. I'm just going to make this clear. I'm on the fence.
Okay. That's the easy one. I can say I'm on the fence too.
No, you're biased. You're positive
guys,
bias.
This is an old saying, sell in May and go away. Another very old saying is that the hottest place in hell is reserved for those who sit in the fence.
Thanks, Alex, just in case.
Since I'm going to
I'm just telling you.
I'll take a stance. Okay, so the question only is that, whether sell in May and go away works or no. Now, typically, as has been seen on the global markets at least, this usually happens when there is a very good rally or a very strong rally ahead of May. Global markets, US markets in particular. And this time around, it hasn't quite happened. So in some sense, it's not been a red hot rally. Usually that used to be the case when, and then the markets used to come off. So what are the known devils, right? Expectations of a rate cut have been pushed out, but it's a known devil because this is, let's first talk of the possible, these are not the possible market triggers. These are the known devils. So I think we've got the caption wrong. But the point is, these are the known devils, that expectations of a rate cuts postpone and reduce. That's part one. The strength of the US economy is resulting in higher yields. higher yields is a known devil. Everybody knows that this is the case, right? The benchmark US oil futures have risen by over 15 to 20%. A known devil. We know that that is happening, right? And that's around us. And the threat of China invading Taiwan, widening Middle East war, and more geopolitical conflicts, known devils. So, excuse me again, these are not possible market triggers. These are the known devils that the market has had to contend with and know about it.
Right.
Now, the possible good news are these, which are coming up now. The sticky part of the US inflation, as per some people, including Ed Yardeni, is not very high, and at some point of time will surprise with the
downside
that will come.
Right.
So that is one possible positive.
Tailwind.
Yeah, tailwind, positive, whatever you call it. There is strength in the US corporate earnings thus far, which is actually auguring very well for future valuations.
80% of the S&P 500, so far at least?
Yes, and it's come out well.
Yeah.
And therefore, one argues that if those earnings stay steady, and we move out 3-4 months into this year, then the markets start looking at 2025 earnings instead of 2024. They follow the calendar year, viewers, so keep that in mind. So that's the other part. The higher oil prices is already getting a lot of shale oil things to start coming in again to the fore, right? It was dormant, it's starting to come up. Does that help in the eventuality of oil prices staying higher? Point number 3. Point number 4, the US market multiples, as I said, 20 times, but steadily might get discounted. So in some sense, the devils are known. The unknowns have a positive tinge to it if we don't see a proliferation of geopolitical
My
conflict.
only point, Niraj, is that while this is all known, this also makes the margin of safety very low, right? If everything is
Any
looking
surprise event.
So yeah, could be viewed very negatively. And also, while we may see a pretty fantastic May, which is what I mean, after yesterday, I think anyone who was doubting that, including me, is now taking a step back, thinking, you know, this is actually looking like a very solid setup. What happens after May? While we may not have a price correction, there may be a very long drawn time correction that we'll have to suffer, because at the end of the day, even if it is a multi-year bull run, not just for India, we've seen that in Japan, we're seeing it in the US, Europe is coming out of the woods, and so is China.
So, I mean, and that's anyone's guess. What we could do, though, is, so we figure out whether or not...
Go long on the Nifty.
Go long on the Nifty, maybe, okay. That could be something that you could interpret. But we'll revisit it at the end of May to see if sell and May go away actually panned out and what the path forward would be, because we'll have the elections results to talk about as well.
Oh wow, that's going to be a volatile.
I just have one line here, and which is that post-May, Samina was talking about, well, if Prabhudas Liradhar is to be believed, the Nifty is hitting 25,800. So.
No, and I think I spoke to Harold yesterday. He said double-digit returns in FY25, and I'm thinking double-digit for another year.
After FY24, that's phenomenal. All right, so viewers, let me know what you think about what we had as a conversation today. Do you actually think that sell in May and go away will pan out this time around? Let us know.